Welcome back. Now, the tech sector is in focus ahead of TCS's fourth quarter numbers on Friday. Now, BNP Paribas, in a recent note, said that the IT industry has possibly bottomed out, and they expect fourth quarter constant currency revenue growth to range between +1% to -1%. To talk about the trends, the outlook, we're now joined by Rakesh Kumar, VP of Equity Research at BNP Paribas, to take some questions. Rakesh, great to have this conversation. This is Reema here. Can you talk about the statement that you've made in your report that IT earnings have bottomed out? And also, the pace of recovery, will it stay at these, middling kind of growth rates for the next few quarters, or will we see a sharper recovery? What are growth numbers looking like for FY15 and FY26? FY25 and 26. Yeah, go ahead.
Got it, Reema. Good morning. Thank you for having me on the show. So the pace of recovery, what we are looking at, even if you are looking at some of the guidance, full year guidance that the companies have given, even at the lower end of it, it implies from where the December quarter YOY growth was, year-over-year growth, we would be looking at recovery across most of the companies into the March quarter. So while there are still concerns on the discretionary demand picking up, at least cyclically, we would start seeing many of these companies to start reporting better year-over-year growth in the March quarter itself. Last quarter commentary also was indicating to some extent that there are some signs of green shoot. As we move into FY25, the base case expectation, at least on the industry growth, would be that it should do at least 2 percentage points higher than where we would be ending in FY24. Within that, some of the IT services companies with much stronger deal wins and better execution will possibly grow stronger than that. But more importantly, within FY25, as we move towards the end of FY25, towards the second half, we expect that the discretionary demand should start picking in, and that could potentially accelerate the overall growth of the industry. As you would have seen over the last 2 years, this discretionary demand was one of the key catalysts to drive the industry growth lower, and specifically in the existing contracts. Not necessarily in the new deal signings, because they have been quite robust actually for the industry overall. It's the existing contracts which were getting reassessed and possibly ramped down, and that is what was impacting the growth. First stage would be that we would start seeing the stabilization on that front, which we believe that has already started playing out. There are no material incremental ramp down in the projects. And as we move into the second half of fiscal 25, we should start seeing some of those projects ramping up, some of the new discretionary projects also coming in, and that can potentially accelerate the growth and should set us well for FY26 to be even stronger growth here.
Rakesh, hi. Thank you very much for joining us on the show. So I want to ask you that, as the IT sector has gone through this post-COVID challenging phase, and now, as you're saying, that we're probably past the worst and the recovery moves forward from here on. In terms of the top-tier companies, which are the ones that you think are coming out right on top in terms of weathering the challenging phase the best and taking charge of the AI opportunity? I mean, for instance, Reema's poll for Q4 tells us that TCS is going to lead the charge on top-line growth, and TCS has been, one of the better performers. So just tell us, top-tier IT, which have become your favorite stocks in terms of how companies have responded to the challenge and how they're willing to now capitalize on the AI opportunity?
Hi, Surabhi. Actually, if you look at these IT services companies over not just last year or so, over the last couple of decades, what they have been really good at essentially is not taking any technology call. Whichever technology comes along, they prepare themselves well to execute and implement projects associated with that. Be it mainframe, be it the era of cloud, and now possibly in the era of Gen AI. So what essentially we are looking at or are trying to gauge these companies is based on how well they are preparing themselves. And you would hear a lot of news flow around the partnerships, getting certification for some of these AI suites and AI products of some of the product companies. So that is where we currently are. These companies are trying to equip themselves with the capability and understanding of these AI products, which they can implement better for the customers. And in that context, historically, we have seen Infosys is one of the company which has done really well, and some of the partnerships which they have formed are quite remarkable, and they definitely seem to be doing a good piece of work over there. TCS also, as you mentioned. In this particular quarter, obviously, it appears that they will have a stronger growth, but more importantly, from preparing for the implementation of GenAI work, they are also working quite smartly. We are a little early in this cycle right now to start assessing who's ahead and who's behind. Possibly in a few quarters, we'll start getting a better sense who's positioned where. Right now, almost everybody is trying to build this capability, which I was referring to. And as we enter into 2025, we would start seeing the effect of this into converting into revenue as well. And that is when we start expecting that there should be an incremental budget allocation for GenAI projects. And that should translating into some of the companies outperforming because they are stronger in GenAI and some of the companies underperforming.
Rakesh, which are the companies which are most leveraged to a pickup, a revival in discretionary demand in large caps and in mid caps?
In the large caps, I think a good gauge would be who struggled the most over the last year or two. Infosys has struggled in the recent quarters. LTIMindtree has struggled, but they have a very strong core portfolio of digital capabilities, both of these companies, and they should ideally perform better once the discretionary demand starts picking up. In the mid caps, it becomes very company specific, difficult to call out broadly over there. Most of the companies have far higher exposure to discretionary and digital technologies, but at the same time, they have outperformed because their addressable market expanded and also their execution specific to their client or vertical has been quite strong. So there may not be as big a delta as possibly we would start seeing in some of these companies in the large cap.
So Infosys and LTIMindtree. A quick question then on the CEO changes. Now this quarter, we will hear from Tech Mahindra's CEO Mohit Joshi on the revival turnaround plan. So all eyes are going to be on that, whether there is, he can put the pedal to the metal. And also secondly, on Wipro, the change in guard with Srinivas Palya coming in and Thierry Teleport out. How would you read these two?
Yeah, even outside of this, over the last year or two, you would see there are a lot of CEOs in the large caps itself who have been there are new CEOs across the board in the larger companies as well. So the industry is now in that churn phase where we have a lot of new CEOs around. Possibly it will increase the competitive intensity overall for the industry. That being said, we do not buy the argument that the company can dramatically get changed within a quarter or two just because a new CEO is there. These IT services companies are like driving a large ship. You cannot turn these ships around within a small period of time. And one of the reason why that is the case is because 97-98% of the revenue that these companies book are from contracts which have been signed in the last 6 months, last 2 years, or possibly last 3 years. And hence turning around these companies in a very short period of time has its own cost. Either it comes along with margin getting diluted, or it comes along with a very lumpy execution or getting into verticals which possibly may not have a sustainable growth in the future. So we'll have to be very careful in how we assess the turnaround story of some of these companies. While we appreciate that there are new CEOs around, there are fundamental reasons of underperformance and outperformance to a specific company, and that does not dramatically get changed within a quarter.
I guess that explains why neither Tech Mahindra nor Wipro are in your top large cap picks. Infosys, HCL, TCS and LTIMindtree are the top picks at BNP Paribas. Just leave us with a call on companies that you're really watching out for in the mid cap space as well. As you said, it's a lot about capitalizing on those discretionary spends, on those opportunities there and niche technology opportunities. So which ones are you most convinced about at the moment?
We cover persistent systems and we quite like the company. It's a very solid track record of execution. Over the last 3 years, they have pivoted with higher focus towards the services business, and that has worked really well under the new CEO. And it appears to be doing pretty well despite the macroeconomic slowdown. It hasn't dramatically impacted their growth story. And as the demand starts accelerating, we would assume that there is going to be a further acceleration in growth, which is already in mid-teen, and possibly margin expansion as well. So that should translate into a much stronger earnings growth. And hence, while on valuation, it could look expensive, if you start looking at on a PEG ratio, it will fall back into a similar range where the rest of the companies are.
Okay. Thank you very much for joining in. Look forward to more conversations with you to get some insights in the, what's happening in the technology world. Get into a break. On the other side, we'll discuss market technicals. Mitesh Thakkar will join in with his top trading bets.